Agrawal of Motilal Oswal Financial Services also joins us. Raamdeo, markets are celebrating. Is the reaction justified? Is the budget as per your expectations?
Yes, Nikunj. I think broadly the budget is as per the expectation. In fact, we are still figuring out what is the intensity of what has happened in the indirect taxes and all, like cigarette duties and those kind of things. But if you look at it broadly, I mean, I've just come out of the room, and one is a very good clarity on retrospective amendments. So there is not going to be any further retrospective amendments, and whatever is there, that will be treated with a soft blow. Second is the REITs, then FDI in insurance, FDI in defense. Then I think one of the big things is that that 15% investment allowance is allowed even from 25 crores to 100 crores. Earlier it was for 100 crores above. So below 100 crores to 25 crores. This is where I think SME segment comes, where bulk of the investments happen. Then they have the road projects up 37,000 crores. Because we are talking about only 7-8 months now. Bulk of the things are not, nothing has happened in the last 4 months. So I think it will be a crunch kind of situation. Then the power, I believe, power projects have been given 10 years holiday, tax holiday or something like that. Then the banks have been allowed to raise funds for infrastructure, long-term funds, without having SLR and CRR. So I don't know how, but it is definitely going to be. In fact, yesterday I was discussing with one of the bank chairmen, and he was saying that this can change the complete liability profile of large banks. They can access these funds and extend the funding of infrastructure projects. Then you have the mutual funds. I think in mutual funds they have done a big thing. All the tax arbitrage which was on in the debt funds, where 5, 6, 7 lakh crores is there. I think the corporates have to rethink what exactly they want to do with their lot of surpluses which are not distributed to the shareholders. So whether they would like to distribute or whether they want to settle for only 5.5–6% kind of net post-tax yield. So in the process, I think there could be some money going into higher dividends, or maybe for even buying of equities for the HNIs. So this is a big piece. I mean, 3–4 lakh crores stuck in debt mutual fund, losing the tax arbitrage. I don't know what is going to be the allocation strategy of the owners of those funds. So I think there are a lot of things, and I think the best thing I liked about that, yeah.
So there are a lot of such small pieces which is adding up to what seems like a good picture, and that possibly explains the market reaction. That's the view from Raamdeo Agrawal. But Mr. Deostali, such a pleasure having you here on ET now. And I'm wondering if you got the view of Swami, Professor Debroy, and Maitli in our panel. Our three economists believe, have a contrarian view. They don't agree with the market reaction, and they don't agree with the mood of corporate India. We had Mr. Parekh and Mr. Kamath speak to us a little while ago. Everybody seems to be praising the budget, but in their view, they believe that here was an opportunity for a big reset in the economy to kind of set the stage for high growth, and that opportunity has been lost. Would you agree with that view, sir?
Well, I think, as I said earlier, the period available was very short. It's just 30–40 days since the new government was formed. So within that period, they had to form this. Secondly, in terms of overall fiscal situation of the country, it is quite challenging. And within those constraints, I think the finance minister has to present this budget. I mean, one can talk about huge growth momentum, etc., in a period of time. However, today we are talking of 4.1% of fiscal deficit. Anything above 4% is high, and today that 4.1% is itself challenging. And I really don't know. There was some confusion about 4.1% and 4.5% when he was presenting the budget. I don't know what is the exact number now, but 4.1% he himself said is very challenging, and there was a limited room available. However, directionally one need to see. I think 1 year budget cannot really determine the credibility of the government. I think directionally, how is the budget? There are several things which have been said in directionally over here. Number one is that fiscal consolidation, 3.6% fiscal deficit next year and 3% thereafter. GST, very serious efforts will be made in this particular year. Like this, there are several announcements which have been made. There is also a tremendous focus on infrastructure and on the social sector. As I said earlier, about 37,000 crore for road sector, 8,000 kilometers of new roads to be awarded, and renewable energy, and there are several other things. I think directionally, in my opinion, the budget is quite okay, and it was too much to expect anything substantially better than this in a short period of time. Yes, it is all right. I think somebody can expect that government can let go fiscal deficit. They can talk about 5% fiscal deficit, and growth should be priority. But
Right. Mr. Deostali, just hold your thoughts there, because I'm going to come back to you in just a moment. A very special guest joining us right here, Jayant Sinha, a BJP MP, but the man who actually speaks the language that markets understand. You've actually got a huge thumbs up. Your government has got a huge thumbs up for its maiden budget from Dalal Street, but economists are a divided house. They do not believe this 4.1% fiscal deficit that was laid out in the interim budget was credible then, and they do not believe it's credible now.
No, I think this was a terrific forward-looking budget, and I think the markets that tend to get these matters right have given a rousing thumbs up to the budget. I think there are 3 or 4 aspects to the budget that you really have to identify as being groundbreaking. I think the entire thrust on macroeconomic stabilization and fiscal consolidation was very clearly laid out, number 1. Number 2, the push towards infrastructure financing and infrastructure build out was very heartening. Number 3, what's been done in terms of streamlining and improving the overall tax and business regime in the country is extremely important. And then number 4, I think just what is being done in terms of inclusion, whether it is the spending on schools, whether it's the spending on differently abled people. If you look at what's been suggested in terms of social spending and social activities, I think those are also very much in the right direction. The reality, of course, is that at this point we really cannot have detailed proposals on all of the different areas that the government has to deal with. At this point, really what you can expect is a policy roadmap and a statement of intent, and I think that was done magnificently in this budget, and I think the markets are responding to that.
The markets are responding to that, but Jayant and Mr. N.K. Singh, I'm sure both of you will want to hear the view from the ratings agencies, isn't it? And we've got Atsi Sheikh joining us on the phone line exclusively with her take on the budget. Atsi, how are you viewing the budget? Because mixed reactions coming in. The market seems to have liked the budget. Are you convinced with the fiscal consolidation roadmap that's been laid out in this budget? Does 4.1% look credible to you?
The 4.1 is, I think, a challenging target, and I think the finance minister himself alluded to the fact that it would be. And I think it depends on 2 things. One, whether there is a revival in growth in the second half of this year, and whether that revival is buoyant in terms of tax revenues. If that is the case, that would help meet that target. 2, whether the spending on subsidies, particularly food, fuel, and fertilizer subsidies, whether the prices of those items remain at current levels or fall or rise, that would then determine expenditure on those things. And I think those 2 things have, in the past, been the factors that have led to fiscal deficit targets being missed, or having to, for the government having to take additional measures to meet those targets. And I think that will be again the case this year as well. So from our perspective, there is a chance that 4.1% target might be missed. It will be missed possibly because growth will come in lower than expected, or the subsidy burden might be higher than anticipated. But really the way we look at it is the deficit targets for the next year and the year beyond, which are significantly lower, and that is indeed positive from a credit perspective.
So how would Moody's now look at India now? Do you think it's going to continue to maintain its rating and give the government a little more time to execute this roadmap that it's laid out, and then take a view on whether India has a case for upgrade? Many in New Delhi are getting greedy, Atsi.
I think at this point, as we said before, 4% and even 3.5% at the central government level is still a very high deficit compared to other countries that are rated Baa3. So even with this fiscal roadmap, India's overall general government, that's the state and the central government deficit, remains much higher than of comparable Baa3 peers. So that's one thing to bear in mind. And the second thing is that what was interesting about the fiscal roadmap was that it was announced, the deficit targets were announced, but we didn't hear specific measures as to how these targets are going to be met. And I think that is as important as the target itself from our perspective. Again, this government has been in office for about 6 weeks, so we weren't expecting a whole slew of details for the next 3 years to be announced today. But what we will be monitoring is how, what is the thinking behind cutting down the fiscal deficit? Is it going to come largely from revenue raising that is one-off? Is it going to come from measures that are more permanent in nature? Will it come from the expenditure side? And again, will some of the distortions that the fiscal deficit causes in terms of, promoting demand but not really promoting supply, will those distortions be addressed as well? So we're looking not just at the number of the target, but at the quality of fiscal consolidation. And that, frankly, we don't know what that will be at this particular point.
All right, Ms. Ashish, just hold your thoughts there because I want to get back. NK Singh, you've been a part of 8 budget-making exercises. How difficult or challenging was it for Mr. Jaitley to have not repealed that very controversial retrospective tax? He went so far and yet he did not grab the opportunity. It is here to stay. He may not use it, yes, but this controversial tax does live and hound us.